Get ready for the big revival. The real estate revival, that is. Now on 77 WABC, your New York weekend.
Get ready for the big revival.
It's Rand on Real Estate with Greg Rand.
Welcome to the big real estate revival. This is Greg Rand. You're listening to Rand on Real Estate on 77 WABC. And today we're going to talk about smart people saying smart things about real estate, which is unusual. We're going to discover some things about what they're all buzzing about out there. We're going to talk about market corrections and some things that I think are happening right now that you're going to want to take note of. And we're going to have a Great Depression success story. A gentleman on the phone is going to tell us some things that his family did to thrive during the Great Depression. So stay with us for the whole half hour. Let me start with the first segment here. Smart people saying smart things. If you're a listener of this show, you know that I almost always have a segment called Smart People Saying Dumb Things about Real Estate, because I did that once, and I liked it. It was therapeutic for me to call some of these big talkers out on their lack of knowledge of the real estate market. And it turned out that every single week when I prepared for the show, there was a new crop of smart people in politics or smart people on Wall Street or smart people in academia just saying the dopiest things in the world about the housing market. Everything from we should create a new jobs program to tear down houses, which is the dumbest idea I ever heard, to just that vocabulary of doom that, you know, everything's a meltdown, everything's a crash, everything's a crisis, everything is a plummeting this and plummeting that. Well, when I was out doing my research this week, I discovered some things from some pretty smart outfits that were very encouraging. So let me share them with you. We'll talk about them.
Probably the most important finding for the short term is that when you look back at past housing cycles, it's really employment growth that's been the key both to the sustainability and the strength of turnarounds in the market. So if employment surprises on the upside, I think housing numbers will surprise on the upside. If, on the other hand, employment comes in weaker than is expected, I think you'll see housing markets continue to struggle for recovery. Interest rates are important, and they're very low right now, but given their low level, there's not much room for them to go down too much more. There is some potential for them to move up, but unless they move up in a large way, that probably won't be the most important factor in the strength of the recovery. Looking out beyond the current period, I think what we're beginning to see is signs, obviously, of employment recovery, signs that investors are coming back into the mortgage market, things returning not to anything that you might consider a norm, but improving.
All right. That was Harvard. That was the Kennedy School of Government, a study released by Harvard. And I apologize for the length of that clip, but I almost wanted to let it keep rolling because I wanted you to hear that nowhere did the word plummet, crisis, or collapse enter into it. There was a very measured understanding. And didn't it sound like he was talking about the long-term view of the economy and real estate? This is something new. Right, I have not heard people in media comment on the housing and mortgage markets in the last couple of years where they weren't hammering home these short-term analyses. Like, you know, home sales in May went down from April. Does this mean we're headed for the next real estate collapse? That was going on for the last couple of weeks. It was driving me insane. So Harvard, you know, you want to believe that Harvard people are smart, right? We've been conditioned to believe that. And I had been conditioned otherwise because they just never came out of Harvard to figure out what was actually happening in the real estate market. But bravo to Harvard for coming up with an explanation of macroeconomics in the housing market that actually makes sense and persuading people to think past the short-term madness that's happening right now and towards the long term. The next clip is from a couple of guys on CNBC, or one guy in particular on CNBC. Let's play that. We'll talk about it.
See a lot of opportunity long term. I think you look at the data that came out today, and yes, it's negative data, and we've had negative data for the last couple of years. But I don't want to see a tree here and miss the forest. And the forest is the fact that long-term demographic trends make housing a long-term growth story. And we see a lot of value long-term. I think if you wait to get into these issues until things have turned around from an employment standpoint, you're going to be behind the curve and you're going to miss the opportunity.
Hallelujah. I think he said long-term 6 times in that one segment. All right, so this guy knows what he's talking about. He knows that if you don't view the real estate market long-term, you're going to miss the story. It's like staring at your feet and trying to figure out what direction you're moving, and you can't do it in real estate. And see, this is really meaningful. I'm the kind I I run a business, okay? My family operates a real estate services company. We own a real estate brokerage in the Hudson Valley called Better Homes and Gardens Rand Realty. Have about 800 people in that brokerage. Number one market share in our region, sell about 5,000 pieces of real estate every year. We have a mortgage company. We have an insurance company, a title insurance company. We're all building this business together. And if you're a business entrepreneur, you have to try to forecast trends. You have to try to figure out where things are going. And so we've become fairly good at trying to not envision what's going to happen next through a crystal ball. But our technique was, we said, if I can't tell you when the market's going to change, can I tell you what it's going to look like when it begins to change? So one of the beauties of real estate being so slow is that it telegraphs everything it's doing. So for example, during the real estate boom of the 2000s, we were doing great. We were growing the business. But because my mom started our company back in the 80s, she was always wagging her finger at us, telling us, don't get used to this. This market cycles. It's going to downturn at some point. We believed her. And we started asking ourselves that question. What might it look like when it begins to turn? And we decided that the quintessential thing that was happening during the real estate boom was the bidding war. Remember the bidding wars, right? Every property that came on the market went to a highest and best offer within a week. If a property sat in the market for 2 weeks, something was wrong. Bidding wars were very, very common. And we said that when they're so extreme that when you've got buyers climbing over each other, scratching and clawing at each other to get their hands on a property, something's, that's an extreme thing. And when that slows down, that should be the very, very earliest signs. It's like the forsythia bush, you want to know when the spring is coming without being able to feel the temperature or look at a calendar or watch that bush. When those little green flowers start to bloom, spring is here. So in terms of forecasting trends, this positivity, or at least even-handedness in the media about the housing market is very telling to me. I say we should pay attention to that, because if you're looking for the opportunity, we've said many times on this show that if everybody around you agrees that it's safe to go back in the water, then it's safe, but there's not going to be that much profit to be made. The opportunity is before everybody else becomes convinced that it's safe to go back in the water. And what I'm starting to see, when I see an even-tempered delivery of housing information that is so counter to what we've seen for the last several years, something's going on out there. I want to believe that it's Rand on real estate, that my listeners are out there perpetuating the story of optimism in real estate, but I'm not that delusional. Something is actually happening out there in the world, and I want you to pay attention to it. We're going to talk about in the next segment how to look for opportunities in your market for properties that have overcorrected, so that you can, if you're starting to feel the love here, if you're starting to believe that the worst is behind us and you want to be able to capitalize so that you can build wealth for your family, so that you can show your kids, if you have any, that you are a bootstrapping entrepreneur and that the business that you choose to build wealth in is real estate investment, that there are opportunities all around you that you could be missing. And as I said, something's happening out there. The media machine that drove this nation and this world into a state of over-pessimism is starting to turn its attitude around and starting to talk optimistically. So we'll talk more about that in a minute. You're listening to Rand on Real Estate. I'm Greg Rand, your host on 77 WABC.